Tuesday, November 1st. Let's do a comprehensive market overview. There's a lot of selling pressure in the market currently. The percentage of stocks in stage 2 in the S&P 500 has dropped to about 42%. Typically, when the market is healthy, you see 50% of stocks or higher in stage 2. So when it drops below that level, it's generally a time to get defensive, raise cash, and don't look as hard for stage 2 trading opportunities, because really a lot of breakouts fail when the market overall is under pressure. A couple other trends I'm seeing in the markets right now is that actually foreign stocks are starting to kind of take over the leadership over U.S. stocks. Notice how the percentage of markets that are in stage 2 of emerging markets and foreign markets are still relatively high, but the internals of the NASDAQ and the S&P 500 have deteriorated at the same time. Previously, for the last year or so, and for the last few years, we've seen a lot of foreign markets have been in a bear market, while the U.S. stock markets have led the world stock market. So it's starting to actually change in that aspect. A couple other things to note about U.S. markets is that if you look at the healthcare sector was formerly one of the leadership sectors of the U.S. markets, and really was where the U.S. separated itself from the rest of the world because of the amount of companies in the healthcare industry that exist in the United States. And notice how the percentage of stocks in stage 4 in different groups in the healthcare sector, there's a high percentage in all kinds of different healthcare groupings, including biotechnology and drug manufacturers, which were former market leaders. So one of the main growth areas of the U.S. stock market has now rolled over and is in a bear market. And really the only growth area of the U.S. market that's trying to propel this market higher is technology. Notice how specifically semiconductors, there's still a high percentage of semiconductor stocks in stage 2, and overall the technology sector is a lot healthier than the healthcare sector, for instance. So really technology is where the bulls are pinning their hopes for this to be only a market pullback and not a transition into a bear market. Now looking at the S&P 500, we are starting to retest the 30-week moving average once again, and getting back to that former resistance level that it's going to be interesting to see what happens if we keep selling off, if it holds as support, or whether we break down and move into a full-fledged stage 4 downtrend. Once again, the healthcare sector was a former market leader. You can see this monster stage 2 uptrend that was in place for multiple years, and it morphed into a stage 3 topping process over the last couple years. And notice how specifically how the S&P 500 made a recent new high over the last few months, but the healthcare sector did not, which is a bearish sign. And healthcare was also underperforming the S&P 500. So now it's rolled over into stage 4 and is actually leading the markets to the downside. Biotech is a great example of this transition. How biotech was really the leading sector, and where lots of impressive stock market gains were won. And once biotech topped in mid 2015, it's remained in a stage 4. Since then, it's tried to retake the 30-week moving average a couple times, but it's failed both times and remains in a stage 4 bear market. Consumer discretionary was also a former market leader, but you can see the action in XLY over the last year and a half. It's been really choppy and a lot more price action um, above and below the 30-week moving average, which signifies a potential topping market. Notice how we're also continuing to underperform the S&P 500. Financials actually was the other sector besides technology that was trying to uh, form a new stage 2 uptrend and take over market leadership. But as we can see here, the XLF still hasn't made a new high along with the S&P 500. So as long as that remains the case, and we see financials not make a new high and roll over, that's definitely bearish for the overall stock market. Semiconductors, once again, was the lone bright spot after the summer breakout of this consolidation area and is leading the market into a stage 2 advance. And semiconductors helped propel the technology sector obviously to a new high, but it remains to be seen whether this is a fake breakout or this is real new leadership. Now turning to the gold sector, gold had an impressive move today, and really the story for gold is that it's continuing to perform well in a stage 2 uptrend, but over the last few weeks it did come under some pressure with renewed strength in the US dollar. So this chart shows gold versus world currencies minus the US dollar, and you can see how it is above the February highs and really is basically in a stage 2 uptrend, and after this retest of the moving average once again bounced higher and looks like it could start to make new highs relatively soon. But if you look at gold priced in US dollars, you can see that really over the last few months the strength in the US dollar has actually pressured the gold market, and after this breakout gold fell back down and is still trying to establish itself as support at this level that was became a consolidation area after the surge into February. So typically a stage 2 bull market would hold this moving average and continue to move higher, but the US dollar pressure kind of kept gold under wraps for a little while longer than you would normally see. But what's actually interesting about the US dollar is that it did start to break out from this consolidation and look like it was going to maybe make a new high, but the fact that US stocks are starting to underperform foreign stocks might be a tell that this could be actually a fake breakout and potentially roll over into a stage 4 bear market for the US dollar. So really there's really interesting things happening right now in the currency markets, and where this direction of the US dollar goes, I think is going to have a near-term impact on the gold market, whether gold just breaks out from here and launches into a new up leg, or if the dollar does remain strong, maybe gold takes a few months longer to finally break out of this consolidation area. And looking at foreign stocks again, if you look at like the iShares Latin America 40 ETF, obviously foreign stocks underperformed and we're in a bear market for multiple years while US stocks were in a bull market. And now we're finally seeing the reversal of that circumstance where foreign stocks are starting, continuing to be in a stage 2 bull market while US stocks are coming under pressure. And notice how this ETF has been outperforming the S&P 500 all year, where it underperformed the S&P 500 for 5 years previous to this year. And one other thing to note is looking at the watch list from the Sage Analysis screener. Whenever the number of stocks that pops into this list starts to dwindle, it's another sign that the stock market is unhealthy because there's just not a lot of stage two breakout potential in unhealthy stock markets. And that's a sign that you shouldn't be fighting the overall market and looking for long opportunities when they don't happen to be there because the market is under pressure. So it's a sign that you shouldn't be fighting the market, but you should be listening to what the market is telling you, and that there's too much selling pressure to have sustainable stage two breakouts, which means you should be raising cash and be defensive and actually looking at the short side of the market um, for opportunities while the market's under pressure. And once this sell off runs its course, then we should see more opportunities on the long side. We have to wait for those to show up and not try to force them and continue to fight the market. That's where you lose money and you get yourself into situations where the market goes against you and you don't know what to do. You should really listen to the message of the market. And, like I said, when things aren't there, don't force it. Just get defensive and just sit it out and wait.